What is up, YouTube? Welcome to another video on high altitude investing. In today's video, I'm going to be talking about the reasons you shouldn't invest in crypto until you watch this video, because it'll give you some foundational techniques, methods, perspective on the market so that you can be profitable rather than just continually lose like the 90% of people that invest in crypto, in stocks, or Forex. The truth of the matter is that there's only a small percentage of the market that figures out how to be successful. And I'm going to go over the perspective and the methods in which will take you to that in today's video. So go ahead and hit that like button for me. Comment down below where you're tuning in from in the world, and hit that subscribe button with the little notification bell. I'm dedicated to uploading 5 videos a week all through 2020 so that you guys can continue to get this amazing content and these updates on crypto continuously. Now, without further ado, let's go ahead and get right into the video. So the number one thing I want you guys to remember before you invest in cryptocurrency is that you should be playing with money you can afford to lose. One of the things that I saw a lot in the 2017 bull run is people would start over leveraging with credit lines, or they would start to sell important objects in their home, or get money in whatever way they possibly can to invest in the cryptocurrency markets. And although I think it's totally okay to sell objects and earn money and figure out ways to invest and get money to invest, if you're selling like your refrigerator or something that is important to you, or if you're trading with your savings account, something that is valuable to you and could greatly detriment you if you lose it, then that is one big thing that's going to make you way too emotional in the markets. You're going to think that there's too much on the line. You'll put too much pressure on yourself, and that pressure will really destroy your logic and just create pure emotion in your trading. So don't do that. If there's a way that you can earn some money without taking away from any of your savings, or without taking away from any of what you need to survive on a regular basis, put that inside of cryptocurrency. You know, maybe it's your tax refund. You don't need that much money after, when you get your tax refund, maybe you have plenty of money left over to go ahead and put some in crypto. Or maybe you just go ahead and get a little part-time job if that's something you're looking for. Maybe you start a YouTube channel and start educating people on how to do different things on YouTube, or just make entertainment. There's so many different ways that you can get money to invest in the markets that won't affect your current lifestyle and will greatly reduce the emotion in your trading. So that's number one thing that you need to hear before you invest in crypto, is just trade money that you can afford to lose. And I also recommend, as a beginner, to start with smaller amounts of money until you can go ahead and be consistently profitable. Then you might feel a little bit more comfortable adding more in. For me, I started with $1,000 of money that I could afford to lose. And within the first 6 months of investing in cryptocurrency, it already went well into the 6-figure mark in my portfolio. Now, mind you, that was all, the majority of my investing took place around the beginning of 2017. Although I was investing in crypto around 2015, I didn't really take it super seriously till I started to notice it was breaking out of all-time resistance, this resistance right here. So, that is a lot of money off of this swing up here in value. Definitely changed my life, changed a lot of my followers' lives in the Discord group and in my VIP area. It was very exciting to be part of that. And, that just goes to show how much money you can make investing in crypto. But it also goes to show the fact that it was money that I could afford to lose. So a lot of the emotion that I had in trading it was gone. I was able to do position sizing a little bit more clearly. Now, don't get me wrong, there's a few spots along the way where I still put too much in single trades. Got a little burnt, but overall I was well into the profit zone. And it just really helps when you don't over leverage and you don't play with money that you need to survive. So the number 2 really big thing that I want you guys to remember when investing in the cryptocurrency markets is that cryptocurrency is extremely volatile. So you need to use trading plans for short-term trading, and you need to be willing to stomach large swings up and down for long-term investing. So if you're doing long-term investing, you really need to be able to watch your portfolio go up into the hundreds of thousands of dollars and then even come back down into maybe 50,000 or whatever it is. You know, I don't know exactly what your portfolio looks like, but you're going to have to be able to stomach some very big swings in your investing portfolio. In your trading portfolio, when you're doing short-term swing trades, maybe you're shorting the market down, maybe you're buying the dip, you need to use the trading plan tool, which is over here on the left-hand side. This is charts.cointrader.pro, but if you're using tradingview.com, you will also have access to this trading plan tool. Now, what this basically does is it allows you to set a target and a stop loss so you know how much you're willing to lose for every trade and how much you're aiming to make on every trade. This will really help you take a lot of the risk off of the table in your short-term swing trading, because you can imagine if you bought the dip right here and let's just say that you didn't have a stop loss. So you buy this dip on this support level right here and you don't use a stop loss. And then all of a sudden that support level fails and you're stuck in the market and you don't have a way to get out of the market. And you watch you could just sell, but you don't know what to do because you're panicking. And then the price drops 52% and then you think Bitcoin's dead. So you sell all of your coins at 3,200 per coin, and then the market continues to reverse out of that price and goes all the way up 328%, well above where you bought originally at 6,000. So that is very common in crypto. If you take a trading plan and then you get stuck in it, and you don't have a stop loss, then you're toast. Now, let's say that you did have a stop loss in this specific scenario. Let's say that you're willing to risk about 20%. That's a little bit of a wide stop loss, but if you have a large target, it's not too bad. And let's just say that you're targeting 70%, so about a 3-to-1 risk to reward. So you're aiming to win about 3.48 times more than you're willing to lose. So this right here, if the market would have dropped, you would have got stopped out with a 20% loss. You then could have been clear-minded because you weren't stuck in the market, taken another trading plan right here with another 20% stop and had a target of way higher because your risk to reward is way better down here. You could be making 200%. You could be making, 160%. It really depends on how much you're looking to target out of that risk to reward ratio when it's really cheap like that. So you could have ended up well into the profit just by cutting your losses on major support, having that stop loss in place so that you can get back into the market on a clear opportunity and make the money. So it's not about winning every single trade when you're swing trading. It's really about making sure your winners are so much bigger than your losers that you don't even have to win 50% of the time and you're in the profit. So that is the number 2, or the next thing that I really want you guys to know before you invest in crypto markets. If you're long-term investing, be willing to stomach these huge gains and these huge losses and just continue to allow it to ride on the long-term uptrend. If you're swing trading in the cryptocurrency markets, really focus on making sure that you have your stop loss and your target with your risk to reward ratio so that you can get back out of the market before you lose too much, before you get too emotional, and then you can get back into the market at a low. Now, the number 3, or the next thing that I really want you guys to pay attention to when you're investing in the cryptocurrency markets is to make sure that you understand position sizing. This kind of goes along with risk management or risk to reward, and it goes along with trading money that you can't afford to lose. Because if you take your, let's say you're investing with $1,000, if you take your $1,000 and then you go ahead and you put $1,000 into Litecoin, and then Litecoin drops 70%, there goes 70% of your entire portfolio. So going all in on anything is stupid no matter what. Going all in is stupid 100% of the time. Always understand position sizing. So when you take one of those swing trades, for example, most professional traders, including myself, only use 3 to 5% of their entire portfolio inside of a swing trade. So those are very, very small amounts, but it keeps you level-headed. It allows you to see your trading opportunity much, much better, and you're not trying to pick this one and done trade that's going to instantly make you a millionaire, although that does happen. You're managing your risk. You're not putting too much in, and you're allowing yourself to grow on a consistent basis. So it's consistency training, and it's emotional psychology. You're removing that emotion from your trading by not putting so much in every single trade that you feel like it has to be correct. And that allows you to practice your form. One of my favorite analogies to use is like shooting basketball hoops. I love to go practice basketball, shoot basketball. It's my favorite sport personally. And when I go shoot hoops, one of the things that my buddy at DIY Investing, Donovan, shout out to DIY Investing, taught me is that you need to practice your form when you're shooting hoops first. So if you're shooting hoops over and over and over and you're slouched over, or you don't have your feet in the right position and you're flinging your arm in a weird way, and if you keep practicing over and over with bad form, even if you make the shot with bad form, then you're doing yourself harm rather than good. It's better to miss the shot when you're practicing with good form than to make the shot with bad form, because once you get your fundamentals in place, your form in place for your shooting, your basketball shots, then you continue to grow at a rate that you never would have before, because you're following all the fundamental rules that allow you to be consistent in your basketball shots and making it straight into the hoop. And that is the same thing with trading. If you continue to take over-leveraged positions, if you continue to go all in, if you continue to do all these things that are bad trading form, even if you make some money in the short term, you're doing yourself a long-term harm, because what's happening is you're training yourself to be inconsistent rather than training yourself to be consistent. And for me personally, when I switched my basketball form from bad form to good form, I started missing a lot more shots, and I will expect that to be the same thing in trading. But don't get discouraged. Continue on, because once you get that new form into your muscle memory, in this case your mind memory with trading, then what happens is you start to accelerate at a rate that you never did before. Right now, my basketball, when I go shoot hoops and I play basketball, I am way more accurate than I've ever been in my life. But it's because every single time I take a shot, I take a moment to make sure my form is in place before I take that shot, so I'm not continually integrating bad habits. And that goes along with trading as well. So position sizing with your swing trading, make sure that you're using very small amounts, 3 to 5%. With your long-term investing, make sure that you're diversified. You're not 100% in Bitcoin. You're not 100% in altcoins. I highly recommend personally, and this isn't financial advice, disclaimers in the description, but what I personally do is I like to use a large degree of Bitcoin, 40 to 60%, depending on the time in the market. And that stabilizes my long-term investing account, whereas I can take smaller positions on altcoins, very small percentage of the portfolio in these altcoins that move way higher but also move way lower, to manage my risk and minimize the potential losses. You know, if you're 100% in on Litecoin or whatever at the top of the market and then it falls 92%, there goes 92% of your portfolio. But if you're in Bitcoin as well, which only fell 80% or just a little more than 80%, then you're mitigating some of that risk. I also personally use a lot of US dollar tether in the account, 15 to 20% into the dollar tether, so that I always have some cash to buy new coins. But also that stabilizes your account further and minimizes risk. So those are really the three big things. Again, I'll run them over one more time so you can really integrate them into your thinking. The very first thing in the crypto markets is do not trade with money that you can't afford to lose. There's heavy risk involved in trading, especially if you don't practice with good form and you don't follow all of the rules, which, to be honest with you, after doing this since 2015 and really doing it hardcore since 2016, 2017, I have seen that the majority of the market makes really stupid mistakes over and over again. And so don't be one of those guys. Most people practice with bad form. Practice with good form and trade with money that you can afford to lose to remove the emotion in your trading. Number 2 is use risk management in your trading. Always have a stop loss. Always have a target in your swing trading so that you know that you're not going to lose any more than a certain percent, so you don't get stuck in trades when you're doing these swing trades. Instead, you continue to grow and you can focus on winning, 50% of the time or even less. If you have a 1 to 3 risk to reward ratio, you could be winning 45% of the time and you're in profit because your winners are so much bigger than your losers that you remain in the green. So again, it's not about making every shot. It's not about making every trade. It's about managing your risks, staying clear-headed so that you continue to maintain your growth. And then last but not least, number 3 is to make sure you guys are position sizing. In your long-term portfolio, keep a large percentage of Bitcoin, keep a large percentage of US dollar tether, and play around in the altcoins that are higher risk. In your short-term trading portfolio, keep a large amount of US dollar tether and Bitcoin and only use 3 to 5% on your swing trades so that you don't get over emotional in your shorter time frames and in your shorter swings of the movement and the price action. If you guys follow these 3 things, I can promise you that you will see a large, significant increase in your ability to time, predict, and grow your portfolio over the long haul. It's not the pretty butterfly thing that everybody wants to hear of, oh, here's this one trick that's going to make every single trade go perfectly for you, or here's this one indicator that will make every single trade go perfectly for you. It's nothing like that. This is the cold, hard truth. These are the techniques, the form that will really take you far in your trading over the long haul so that you continue to grow your portfolio. And yes, they're a little difficult, but they're well worth it. So learn these things, you guys. I appreciate every single one of you for tuning in today's video. hit that like button for me, hit that subscribe button and the little notification bell. I'm dedicated to making 5 videos a week, every single week of the entire year of 2020. And I'm looking forward to seeing you guys in my next videos. As always, stay profitable out there.